Hey folks, Dan Frio here with your rate update for June 18th, 2025. So in 2 hours, the Federal Reserve is going to come out and tell us what exactly they're going to do. Well, we know what they're going to do. So we're trying to figure out what projections they're going to give us or the details they're going to give us or what their thinking is down the road. How they're going to do that? Well, they're going to actually provide us with a dot plot. And this is what the dot plot looks like. We're going to focus in on this because this will be affecting these things today. How? Well, that's what I'm going to show in today's video. So my name is Dan Frio. I actually do this report twice a day to inform you guys what's going on with these things over here and the whys behind it. We have the Federal Reserve meeting today, and we know that they're not going to cut rates between tariffs and wars and everything else. They're just going to be on standby, and I agree with what they're doing. But now, what is their thinking down the road when a lot of this dust hopefully settles here soon? So we want to focus in on the dot plot, but the Federal Reserve, like I said, they're meeting in 2 hours. What are they going to do? So let's focus in on what the dot plot's going to tell us. So let's get over to here, and then we'll go over and see what the markets are doing right now up until where the Federal Reserve is going to meet. Then I'll be live later this afternoon after the Fed meets because we're going to focus in on this and how this will change the markets. So right now, here's what the dot plot looks like. So what it is Federal Reserve members that have the ability to vote on this or put a dot in the dot plot, they're going to put dots again at this meeting to tell us where they're expecting the federal funds rate to go. So here's the year down through here, if you can see this, and over through here is the rates. And I know it's a little bit hard to see. I'll try to blow this up as much as I can. That's as much as I can really get it without losing it. Let's see. Okay. So right now we have the Federal Reserve. They're holding the federal funds rate right in this cell right through here. That's 4.25 to 4.5. And that's right through, let's see if I got the Fed Watch tool up here. Well, I don't have that up here, but you're going to have to trust me on the federal funds rate. It's 4.25 to 4.5 right through here. So now at this meeting, they're going to revise this. And they're going to tell us where they're expecting this. Because if you look at this report, if we're right here, it's looking like 1-2 rate cuts is what most of the federal officials voted on. So the most votes are right through here. That's a rate of 3.75 to 4. So they're anticipating 2 rate cuts. Well, if they're still going to anticipate 2 rate cuts, and we know that there's not one coming at this meeting, and maybe not at the next meeting, well, when would they be here? So let's go over to the projections of what they're expected to be at this meeting. So there is let's say 100% chance they're not going to do anything with rates this meeting. And this actually ticked up. This was actually lower yesterday, and this ticked up once again today to say in July they're not going to do anything either. So this doesn't mean mortgage rates are going to go down or mortgage rates are going to go up. Remember the last time the Federal Reserve cut rates over 0.5%? Mortgage rates spiked up, and that wasn't good news because it was economic factors. That's what I try to teach you guys on a daily basis, the economics behind all this. So let's look at the news that we got out so far today. It's right through here. We were looking at initial jobless claims because that was the pivot point now. We got inflation. Well, most of inflation is kind of in check a little bit. If you take out the threat of tariffs, if the tariffs come in better or as is or better than expected, then hopefully the inflation piece of the puzzle is starting to retract. Now what they're saying is the economy is slowing down because of retail sales that we're getting. Look at the retail sales numbers that we got yesterday. So now that they're saying, maybe jobless claims or people are going to get more people are going to get fired. Well, it didn't happen then this time. So initial jobless claims, I don't know how they did this, but they revised it. It was 245,000 last time. They expected it to come in at 246. It came in right at point. So I was hoping that this come in. If you don't believe me, check out yesterday's video. And then you had crude oil inventories crashing. Don't really care about those right now. We might care about those if the Iran-Israel conflict continues, but the focus right now is what the Federal Reserve is going to do later this afternoon. They will be out telling us exactly what they're going to do, and they'll provide us also with the dot plot. Let's get over to the bond market to see how it is faring today. So the bonds are up 18 ticks. That means mortgage rates, they'll continue to ease a little bit. But we do have some information on jobless claims and housing starts. Now, you want house prices to drop because of supply and demand. Well, there's not a lot of supply coming to the market on the new builds, especially the permits. So how's this going to affect home prices? This might cause prices to stay stickier on the high side. But let's get to today's report from Rick Santelli, see what he has to tell us about the housing starts and also about jobless claims. Rick, take it away for me, buddy.
Jobless claims and housing starts data are going to hit the wires right now in about 2 seconds. Rick Santelli standing by at this and CME in Chicago. Hey, Rick.
Hi, good morning, Joe. Yes, housing starts for the month of May expected 1,350,000 seasonally adjusted. Annualized units comes in light, extremely light, 1,256,000. That is definitely well below what we were expecting, and that would be the lightest going back, well, quite a ways. We're going back to, wow, 1256. We're going all the way back to May of 2020. May of 2020, find a smaller number. And on the permit side, well, the permit side's on the light side as well, but not nearly to the extent of housing starts. Expecting a number on 1,420,000-ish. We end up with 1,393,000, so a bit under 1.4 million. And indeed, that would be the lightest going back to June of 2020. So these numbers are light. And there's a lot of stories to be told here. First of all, the difference, of course, between single family and multi-family. But on single family in particular, on the start side, we should have expected a weak number. Home builders, their inventory of new single family homes has been going up, up, up. And there has been a lot of warnings in terms of how that glut may be affected, of course. And on the jobless front, well, initial jobless claims coming in at 245,000, spot on with expectations, and it would have been 3,000 less than our last look, but it was revised from 248 to 250,000, which puts it back down 5,000, and it is once again comping to the last time we were over 250,000. You are going to the first week in October when we were whisker under 260,000, but this has been building. As a matter of fact, if we look at initial claims right now, this would be the third week in a row it's been somewhat elevated and just a knock below 250,000, big psychological area. The counterpoint to that is, if you look at the last 3 or 4 years on a chart, it really is pretty darn sideways. On continuing claims, once again, above 1.9 million, 1,945,000. That now becomes the fourth consecutive read over 1.9 million. These are comping to November of 2021. We see that interest rates, well, coming into this number, we're at 435. We're maybe a basis point or two higher in a 10. We're basically unchanged, down 3 basis points in a 2-year at 393. Maybe the big story in interest rates, obviously on the second day of a Fed meeting, is the Fed. And I will say that my own personal preference, I have no problem for higher for longer, but I would like to put a caveat out there. The Fed really doesn't seem to want to ease. If they wanted to, they could find reasons to. They could find reasons not to ease. In terms of tariffs, there's few precedents, and some of the theorizing that some Fed officials have about how the ongoing discussion of tariffs without any definitive information on tariffs might be changing expectations. I don't know. I just don't see how that logic could really hold up to major scrutiny. But nonetheless, they're the Fed. They can do as they want. And as I said, they can defend either side of the goalpost with regard to either easing or not easing, in my opinion. Joe, back to you.
Thanks, Rick. I'd love to meet this guy. He actually lives at the town just north of me. So if anybody watches these videos and knows him, I'd love to be introduced to him. I love the guy. So here's what we're seeing. It took a little bit of a move this morning. He said the rates were going up just a tad. Well, they actually moved directions, and now we have bond markets up 19 ticks. So we'll probably see another 0.3 off of this. So you might be at 6.85 by the end of the day. A nice little revision there, but that's going to be short-lived, because once the Federal Reserve comes out and tells us what exactly they're going to do, unless it just is just off the charts, you're not really going to see the markets move. But when that dot plot gets analyzed, that might be a market mover. So I'll explain that to you once that market hits. We will have a live event later this afternoon once the Federal Reserve comes out and tells us what they're going to do and posts the dot plot. I'll give you a live event to show you guys the market reactions to that. So check out today's live event. From there, I will be heading out of town to go visit my mother. It's my 60th birthday this weekend, folks. So I'll be turning 60 on Saturday, June 22nd. If you like my videos and you want to do something, you can actually buy me a coffee down below. In the description part down below, all the way at the bottom, I think it says buy me a coffee. If you'd like to buy me a coffee for my birthday, I'd appreciate it. But other than that, I will be back live later this afternoon, and I'll be trying to do a live event, actually Friday, from Fallsby, West Virginia, where Nippon Steel is, and I'm going to kind of give you a walk around of the town I grew up in, so you can see the effects of the China dumping steel on my town before and after. So check out that video, but I will be doing that live on Friday. We won't be here tomorrow because it is Juneteenth, and where the markets are closed and the bank is closed used as well. So that's our report for today so far, folks. If you'd like to find out more about me and my team, just visit us at therateupdate.com. A little bit about me, though, is I'm actually a federally licensed mortgage loan officer. So I'm licensed in all 50 states as well as Puerto Rico. I'd love to help you if you're looking to buy or refinance. The unique thing about us is we have a slogan: one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Well, I work at a federal bank, so that means I'm federally chartered. But the cool thing about this is we're set up with 32 other lenders. So think of it. If you apply with me, we're not going to quote you a rate from us. It's going to be from me and 32 other lenders. So if you want to find out how this works and how to get involved, just visit us at therateupdate.com. You can give us a call right up through here. You can ask me a question. So you just click this and it'll shoot me a question, whatever you need. Please add your information in there, like your name and phone number. Love to reach out to you directly and answer any questions that you have. You can schedule a consultation with us right here. But if you're interested in that 1% down program, if you're a home buyer, doesn't matter if you're a first-time home buyer or not, check and see if you qualify for the 1% down. Might be a game changer if you're looking to buy a house in 2025. So thanks for watching. I'll be back later this afternoon live when the Federal Reserve comes out and tells us what they're going to do. I'm going to show you instant market reactions to that. So thanks for watching. See you later, and hope you join me on the live event. Take care. Have a good morning. Bye-bye.